Inflation is still running very hot, ladies and gentlemen. We're going to be talking about all of that on today's show. We're going to look at some of the other data points that came out around the health of the consumer. Before we get into it, please do us a favor. Hit that like button down there. If you have not yet, subscribe to our channel for content Monday through Friday. We put out as much quality as we can. And nothing that Kevin or I say is financial advice. We're not financial advisors. Or if you guys who love the markets, I got my kiddo here with me. He wants to hear all about the latest inflation reading. He's going to be out trading everybody in a few years, but make sure you do your own research before you get out traded by my kid. Okay. So Kevin, we are seeing absolute dog shit in the markets. PCE came in hot. All right. So if we look at it, PCE came in 4.4% increase versus 3.9% expected. This is also compared to a 4.2% increase in March. Hot number. The core number came in 4.7% year over year versus 4.6% expected. Hot number. We saw personal spending increased 0.8% month over month versus 0.5% expected. Personal income came in at expectation. Going back to personal spending for a second, we're seeing people dip further into their savings for everyday items. Okay. People are having to dip further in. We also saw data from Costco yesterday. I'm just going to ramble off some data for a little bit. We also saw Costco earnings come in. They were under expectations. And a big part of that is transaction volume is down because people are buying less discretionary. So we're people buying less discretionary. We have debt at an all-time high. We have persistent inflation. We have a Fed that has a mandate to get inflation down to 2%. We just saw the probability of a 25 basis point hike be greater than the probability of a pause for the first time since the last meeting. Guess who was calling for that one? So in what world are the markets not going down at the moment? Is crypto not going down? Is the pre-markets not going down? This world, because it's full of shit.
Yeah. It's, we've said it for months. It's toothpicks and bullshit that are keeping this market together. There's nothing good in the market. And again, I think that's just we're at a point where the longer a bubble takes to burst, the worse it gets. And when we're seeing stuff like this happen, we're constantly getting negative data. We're in situations where people are hoping on a no-win outcome for one side to be better than the other. It's just like we're hoping for bad news to be good news. And I think we're past the point where bad news is good news in the markets. We've priced in everything to this point, and we continue to see that inflation is not coming down fast enough. And they're going to.
It's not coming down. No, not even fast enough. From last month, it's not coming down at all.
Right. I'm talking about for the past few months, and then obviously today we're not seeing it come down at all. And again, I'm going to quote Michael Burry, but I'm not going to quote him because I don't know the exact quote. But he said that there would be an inflationary spike, and inflation comes and goes, and people got excited because it was coming down from 9%. It was easy to bring inflation down from 9% to 5%.
Yeah,
75s and 50s, all you had to do. But now we're at a point where they want that 2% rate. You gotta start battling a little bit harder, because this is going to be a lot harder of a challenge now, especially with PCE coming in this hot. This is not bullish in any way. I see no outcome where the markets rally. You want to take Nvidia and AI and that be your bullish statement for why people should be buying in? Be my guest, Jim Cramer. That seems like you'd be a game you're playing way too late. Nothing in this market gets me excited at all.
I've been trying to find reasons to be bullish. I've been trying to and not even just to remove my biases, right? Because I've been very bearish, and I've been trying to find some reason to not be. And this data today is just everything that we've seen is just there's no reason. We're 6 days away from a potential default on the U.S. debt obligations. Half of those days are going to be a long holiday weekend, and we're getting allegedly closer to a deal. But until there is ink on paper, I'm not going to believe it. Until it's been signed through the House and the Senate and Biden, I'm not going to believe it. But the volatility index is down to 18.77. I don't Meanwhile, the dollar has gone up. Treasuries are starting to go back up a little bit. We saw the 2-year get to 4.6. It's back down to 4.57. None of it makes sense. We're just in this place where it's hopium. People are hoping that we're out of a bear market. And that's not how bear markets work. It's not like I don't care how much you want the bear market to be over. That is irrelevant. It's what is actually driving the action right now and what is going to be responsible for future movements in the market. And no indicator right now says that the Fed is going to stop raising rates. They've stated that they're going to keep raising until we see inflation come down. They're expecting this to be a long-term battle. We are in for a multi-year bear market. There's nothing positive right now, but people keep want to like it, it's like that meme where the building is tipping over and there's like a few poles holding it up. And those poles right now are AI and hope. And that's it. And I'm not going to bet on those when it comes to my finances. That's ridiculous.
Yeah, I mean, I think you said it. I couldn't have said it any better. This is just an absolute shit show. It definitely has a multi-year bear market. We're in one right now. It's been over a year, so technically it's a multi-year bear market. And I don't see a place where this is going to turn around anytime soon. We got a nice little relief rally into some new all-time highs for some stocks, some coins back in January till like May. But I think we're at the tipping point, man. This is the point where people start to realize. Hold on one second.
Kevin, will you turn your alarm off?
It's not me. It's my roommates. That's my bad. Yeah, this is absolutely just a point where we're just going to get we're going to start seeing some negative price action. And again, we've known this for months. It's played out a little bit longer than we expected. Maybe the data that came back today starts to spook some people, but clearly not in the markets going into this weekend. People are still keeping the debt ceiling at the top priority of the top of their list in terms of priorities of what to be watching. And yeah, it's important, but this is also important. But again, the macro doesn't matter. The Bitcoin halving is coming. AI is going to lead us into a new bull market. So is Hong Kong. Just got to think bigger, man. Got to look at the big picture. Nothing's good right now.
Nothing is good right now. I'm looking ahead. Let's look ahead to next week a little bit. Monday, Memorial Day here in the States. No reporting. Markets are closed. As I look through the other reports coming out next week, we got the JOLTS report on, next week is a big job week. So we have the JOLTS report on Wednesday. We got jobless claims on Thursday, and then Friday is the employment report. Now, that being said, it feels like lately jobs data just hasn't really moved the market the way it used to. And this is on the back of Fed Powell stating that, they're less concerned about the job market than they are with inflation. So that, they go hand in hand though. So I don't know how, once again, it's the markets are being irrational, and that's fine.
It's really bad.
Yeah, at this point, it's really just come down to the fact that like you have to avoid the FOMO right now. Like, I don't care who, like a lot of these analysts out there, guess what? Even some of the smartest people in the world can be wrong. If these are some of the best analysts in the world, guess what? They're human too. They're susceptible to making mistakes. And for people to be raising their S&P price target to 4,600 purely due to the fact that AI has caused a spike, guess what? That could very well be a bubble. As someone who is a big NVIDIA holder, I wouldn't love it, but I'm also trying to be rational here and remove that bias. And I don't think a lot of these people at JP Morgan who are calling, at B of A who are calling for things to be bullish, I disagree with them. Yep, they sit in a big fancy New York office, and I'm sitting here in my living room in Colorado. But God damn it, like, they can be wrong and we can be right. And I'm very confident that in this case, we are right.
Yeah, 100%. Title means nothing in this world of financial, the financial world. How much money you make and then how consistent you are with making that money is obviously the most important factor, in my opinion. And if you're going to be wrong with everyone else, then, you could easily just be, someone in office making tons of money, managing millions, billions of dollars of user funds and stuff like that. It's very likely. But I don't think we're wrong at all. I've been confident in our positions and everything like that since fucking June of last year. You know what I mean? And that was after we saw a nice rally all the way until September to like 25K, 24K. So again, I think that we are far from over in this bear market. We haven't seen the worst of it, in my opinion. I mean, the first move down from, if you're looking at Bitcoin, 69 to 47 is a pretty big move. And then obviously 47 to 17, massive move. But in terms of the move that's going to scare everyone, spook everybody, where all the data, everything that's just built up into this bubble hasn't happened yet. And that's possibly going to be the time where people are going to be panicking the most. But going back to, jobs and everything that's coming out next week, unemployment has to go up. I don't care what anyone says. Unemployment has to go up in a significant way. I hate to say that. I think I've been, the party pooper saying that people are going to be, Powell thinks that we're not going to see unemployment go up, but we could see inflation come down. I disagree with him. I couldn't disagree with him more. I think we're at a place where inflation is obviously spiking, or it's not come down at all. It's going to be going up, and we're going to see rates continue to rise. And these companies are going to have to lay these employees off. They have to make cuts. They have to make sacrifices. They will have to get even more lean. And it's very likely that we start to see that. I know JP Morgan just let go, 1,000 employees of First Republic, and they were getting paid like massive amounts that they were getting paid. Absolutely cut them. And that was faster than they had anticipated. We're going to start seeing this across almost every sector. Not one sector is safe, in my opinion. I mean, medical. I always say that medical is fine because people are going to be getting hurt, whatever. But unemployment at 3.4% is idiotic, in my opinion. I think that it absolutely needs to go higher. I'm not wishing it goes higher, but it's just the reality. It's how economics work. If inflation is going to be going up, obviously they're going to raise rates, and then that's going to in turn bring unemployment up because people are going to have to cut, expenses. And employees are probably one of the easiest ways you can do it, because did we overhire and overpay people for the past 15 years? Absolutely. There are definitely positions in some of these companies that don't need to exist. And especially with AI coming out now, I think that's definitely going to be, we don't necessarily need someone to be, managing any of our, we don't need a front desk receptionist or anything like that to be scheduling times or something like that. That could work all the way from the bottom up. And I definitely don't think we've seen that yet. And unemployment is probably going to be on the horizon over the next 6 to 8 months.
Yeah, absolutely. Lest we forget, we're still due for student debt payments to kick back off again later this summer. Like,
fuck, man,
nothing.
How much shit is going on in this world right now, and the markets are doing nothing.
If you are at a point where you are debt free, and you're not carrying like recurring credit debt, and you got like a low mortgage rate, you are just way ahead of the pack at this point. Like, you are setting yourself up for success, and I'm very proud of you. Just know that. So we're heading into the last trading day of the week. We discussed earlier in the week that come today, there could be a cascade of negative things happening. The first part was hot PCE data. We got it. The second part is no debt ceiling deal. And, come the last hour of the trading day, if we don't have a debt ceiling deal, like official, people are going to go risk off heading into the holiday weekend. And you're going to see the biggest red candle that we've seen in months. Like, I swear I've not, like, if we don't, and there's still no debt ceiling deal, then I might just give up. Because at that point, it'll be the fact that the market is completely rigged. Like, there should be no reason that we don't see red in the markets today. Like, even if there is a debt deal, like, that's not great for equities.
No,
like that money, there's really no win on the equity side right now. Like, I know treasuries are boring and getting 4.5% or 5%. What's a 3-month right now? A 3-month note is trading at 5.35%. I know it's boring, but that 5.35 is probably, I would be willing to bet that over the next 3 months, a 5.35% return on a treasury note is going to be better than what you're going to see in the equity markets.
Yeah, it's better than a negative 30%.
Yeah, that's true. Hold on, that's accurate. That's accurate. So, it's boring. I get it. But at the same time, like, man, if you got cash, that's what I plan on doing, is like just putting that to the side, getting that 3-month. If things are still bad in 3 months, which I think they will, just roll that over for another 3 months and just kind of focus on other things, because this market is ridiculous right now. The more you try to rationalize it and figure out when the right time is, like, I don't know, man. I'm obviously very frustrated, but you just got to stay patient. Like, just hold to your thesis, be flexible when it comes to new data, and the new data isn't causing me to budge on how I feel. So that's kind of where I'm at right now. I don't think on the crypto side that the Hong Kong trade is as big of a deal as people are making it out to be. Maybe I'm wrong there, but we should know, June 1st could also be a bloodbath if we don't come to a deal on the debt ceiling. If the Hong Kong stuff isn't as big of a deal as we're making it out to be, crypto could just take an absolute shit.
I would die to see if June 1st just Hong Kong opens up like 85% short positions on all these exchanges, and then everyone just absolutely loses it, thinking that the money's going to come in. It's like the opposite way, and there's no money to push the price up because we all spent it on the going into the Hong Kong, ability for them to trade. So that'd be hilarious in some ways, but also it's just like, I mean, we're going into the summer, volume's going to be extremely low. So even if they do come into the market, I don't think it's going to be some massive thing. The U.S. obviously has such an important part in both our markets, but then also in the crypto market. The U.S. probably is one of the countries that allows most trading or has a good amount of money in trading. Not the most friendly in terms of regulatory purposes, but definitely we do play a huge role in it. And if we have no money and, maybe they're coming into the market, they're going to know that and they're not going to necessarily go along.
Yep. I'm watching every time I refresh the page for the rate hike probability, it ticks up just a little bit towards 25 basis points. And then I look ahead to July, and there's a 26% chance of another 25 at that one. I think it's going to keep going up. I think it's just going to keep going up. Bullard said he thought we needed to get to 6%, and I don't know. Like I think he's probably right. I wouldn't be shocked if we get more hot inflation reading before the next Fed, because I do believe that we get CPI, and I know PCE is the Fed's preferred one, but if we get hot CPI, don't rule out a 50. Like we've had no new, as far as we know, no new banking. Well, hold on. We didn't talk about Key Bank and Citi. It's not, I don't.
Yeah, that's a weird situation there.
That's a weird situation, pausing pauses. But outside of that, we haven't had any new issues with the banking sector. And I think, to me, that gives the Fed the green light to where if we get another strong jobs report, if we get another hot inflation reading, like that gives them the green light to go for 50 again. And the markets are not ready for that. The markets are nowhere close to ready for that. That would be an absolute bloodbath. Let me real quick. Will you vamp for a second so I can just pull up the CPI? Actually, I'm just gonna do it. We're doing it live. The next one is June 13th. When's the next Fed? The next Fed is June 14th. So it goes on during the first day of the Fed meeting. So we're gonna know they're gonna have that inflation reading. I mean, it's gonna come down to the wire as far as the market's pricing this stuff in. The Fed makes their announcement. Did you lose me?
No, you're good. I just want to check something on the charts real quick.
Yeah. So we're going to get the next CPI print. The Fed meets June 13th and 14th with their rate decision on the 14th, Powell's presser on the 14th. We'll get inflation data the first day that they meet. So they're going to start their meeting off by seeing that inflation. Hey, maybe it's hot. Shit, maybe we got to raise 50 basis points. Maybe we need to raise another 25 in July. And if they do that, that's going to get that rate closer to 6%, where Bullard thinks it should be. Granted, he's not voting this year, so he doesn't have a real say in the matter. But, I'll put it on, as the kids say, put it on wax. I think we're going to get, I think there's a good chance we get 50 basis points in June. Do the kids still say that?
What, put on wax?
Yeah.
I don't know. That might be before or after my time. I have no idea. But I'm going to show some based on the Dow charts. We're going to look at 2008. And again, I always bring up 2008 because look at this. Right here, this red candle with this white line through it, that's June 2nd, 2008. This is June 9th, and then the weeks after, June 16th. And then we went all the way to the bottom where we were at. It was at July 14th, 2008. And if we look at how much the Dow had dropped from that point, let's say, let's start from this white line. Go here to there, it dropped 14%. So again, if we are getting some bad CPI data coming in around that time, then they're going to do a rate hike. I wouldn't be surprised if we're going to see some negative price action. Again, this doesn't have to happen, these fractals or any of this price action correlating to 2008. But I mean, man, it's just lining up kind of pretty nicely at this point. Yeah, I mean, we thought that May was going to be a terrible sell-off month. We sold off a pretty good amount. Obviously, the Dow got under 33, which is that's big in my opinion. I thought that if it got under 33, it would see like 32.5, got to like 32.6, 7, like high seven, like low sevens. But looking at this right now, I think that we are still, and again, we have so much data on the horizon. We got waiting on the debt ceiling resolution. Are we going to keep our AAA credit rating? There's so much on the horizon that June might be an absolute bloodbath, and that could be starting the month on June 1st. It could be halfway through when we get the FOMC rate hike. It's going to be really interesting to see. But this is just like, I'm not saying this game is easy, but I'm saying if you do look hard enough, there's always signs to what could potentially be on the horizon. And sometimes these cycles repeat. And I think we are in a recession that's similar to 2008, where we'll see some negative price action similar to that, where it's just an absolute bubble that crashes. It doesn't have to be housing that causes it, but it definitely could be all the greed and stupidity that we currently have. And AI could 100% be something where a lot of people pull their money into, and we just see the rug pulled from them. NASDAQ definitely, I think, is one that's going to have to see a negative price action, just too overbought. And that could be the one today where, at the close, last hour, no deal. We could see NASDAQ sell off a good amount. Obviously, it rallied, 338 yesterday, 334. Wouldn't be surprised if some of those profits are taken pretty soon.
Yeah. We're inching closer to stagflation, and no one wants to admit it. Like, this inflation is remaining high. Demand is starting to go down, and it will continue to do so because people are running out of money. Their savings are taking a hit. I think I saw today the number is like savings went down like 4 something percent. Like, that ain't good. Like, it would be really bad. Like, that's worst case scenario, but I don't think we can rule it out because clearly things are irrational right now. We're in a bad place in really every metric that has ever been used is not pointing positive. So I think it's better to be, start preparing for that. And we'll talk about that more next week, like how to be prepared for that. You and I'll do some research, further into the last time the U.S. saw we've only ever seen stagflation in this country once, and that was back in the 70s. That's well before my time. It's very well before your time. But, it's better to be prepared and not need that data than to be caught with your pants down if it happens. So we'll talk about that more next week. We're going to wrap this up for today. Kevin's got to go earn that green so he can buy the dip when it inevitably happens. So appreciate everybody for watching today's show. Hope you have an awesome Memorial Day weekend. We'll be back next week. If you have not yet, do us a favor. There's some buttons down below that we really would appreciate you hitting. The like, the subscribe, drop a comment, and the big one, sharing us out on social media. If you're tired of the Moon Boys, if you think that people need better content that isn't all just sunshine and rainbows, I know that it's, the bearish stuff is not the most fun, but we want to try to help you as much as possible. So share us out on social media to your friends. If you're at a Memorial Day barbecue this weekend, hey, maybe mention us. Maybe pull us up on their phone and hit that subscribe button for them. We'd appreciate it. So we'll be back next week. Have a great weekend. Be safe out there. We'll see you next time.
Take care.